Welcome to The Debate. Today, we are deep in the trenches of London's commercial property market. We're exploring a fundamental tension, the value of, enduring geographical prestige versus the value of modern, state-of-the-art utility.
And our source material for this is quite compelling. We've got two very specific serviced office listings. On one hand, 53 Duke Street, Mayfair, which is listed at £500 per calendar month. And that's pitched directly against Paris Garden in Southwark, which comes in, interestingly, higher at £600.
Which brings us to the central question we have to answer today. Does that traditional geographical prestige, the kind epitomized by that Mayfair W1 postcode, does it maintain its status as the ultimate driver of value? Or does the superior specification, the services, and the sheer utility of the newer Southwark listing now command the premium price point in what might be a shifting market?
And I'm going to maintain that the £100 premium for Southwark is completely justified. It reflects, a clear market valuation of quantifiable quality, operational certainty, and utility. It signals that the demands of a modern business are starting to outweigh that pure historical cachet.
And I will be arguing that the Mayfair location fundamentally provides a superior, enduring commercial value.
I see why you think that, but let me give you a different perspective. I believe that £500 price isn't a true reflection of its worth. It's an exceptional, almost anomalous deal, and the inherent value of that Mayfair address is quite simply undisputed and should outweigh any marginal difference in the internal fit-out. When we talk about 53 Duke Street, Mayfair, we aren't just discussing real estate, are we? We're discussing commercial signaling. The listing itself calls it Prime Mayfair. Its value is derived from its scarcity and its proximity to very specific high-value client demographics. We're talking about being opposite Selfridges, a minute's walk from Bond Street Tube. That gives you instant access to the core of West End finance, luxury brands, B2B enterprise. This location provides a kind of intangible asset, immediate validation.
Intangible value is a compelling narrative, I'll give you that. But the market is becoming increasingly pragmatic, and pragmatism, it favors certainty. The higher price of the Paris Garden listing reflects that shift. I come at it from a different way. The evidence here is rooted in quantifiable metrics. Paris Garden is fitted to a Grade A specification across its expansive 75,000 square feet, and it offers fully furnished, flexible terms, which, are common, but they're paired with an explicit, robust suite of features.
Those features sound a lot like standard office provisions to me.
Oh, they are standard, yes, but they are explicitly included and guaranteed. We're talking IT and telephony infrastructure that's state-of-the-art, coupled with amenities that cater directly to modern employee expectations, showers, bike storage, an on-site cafe. And I think most crucially, the reception team offers ad hoc admin and secretarial services. Now, that level of integrated operational support is a measurable cost saving and a key differentiator that the Mayfair listing simply doesn't specify. The £600 price buys you operational peace of mind, which is something I think traditional prestige often fails to guarantee.
Operational peace of mind is valuable, I agree, but that Mayfair address gives you immediate, high-level client access. And let's not overlook the marketing power. The listing explicitly offers the client a choice of a Duke Street or Oxford Street address for their company. Now, that flexibility allows a small firm to immediately tap into the brand equity of one of the world's most famous commercial corridors. That commercial leverage, derived purely from geography, is an unparalleled asset that I would argue easily offsets any marginal benefit from having an on-site coffee pod.
This brings us squarely to our first real point of contention then. The weight of specification. You dismiss Grade A as a marginal benefit, but that Grade A mistrick, particularly in a newly refurbished block like Paris Garden, is foundational to its premium. For anyone who doesn't spend their life reading property specs, Grade A is an industry standard. It implies specific, verifiable assurances about HVAC systems, security, power backup, and high-speed data infrastructure.
Okay, I accept that. Grade A offers predictable performance. It gives tenants assurance of modern maintenance and reliable utility.
Exactly.
And that predictability translates directly into lower operational risk. A company leasing space in Paris Garden knows they have modern cabling, a security system that meets current compliance standards. They've minimized the risk of costly IT downtime. This quantifiable assurance of state-of-the-art infrastructure justifies the £100 premium immediately. The price isn't paying for marble on the walls, it's paying for engineering certainty.
That's an interesting point, though. I would frame it differently. Grade A is the benchmark for institutional, large-scale corporate centers. It's necessary for large firms that prioritize uniformity. But what about the specific clientele attracted to Mayfair? While the Mayfair space is also newly refurbished and contemporary, it retains crucial character elements, those original high ceilings and wooden floors.
Which often just translates to higher utility bills and less soundproofing, doesn't it?
Not necessarily. For a specific high-end established clientele, think private wealth managers, bespoke legal firms, luxury creative consultancies, these elements are not structural drawbacks. They are soft value assets. They appeal to tenants seeking an established, non-generic London office aesthetic. Character in Mayfair is a scarce resource. By opting for Mayfair, you're paying for non-replicable ambiance, differentiating your firm from the standardized glass and steel aesthetic that a purely grade A specification so often entails. In that context, the Mayfair character is a premium amenity.
I understand the appeal of authenticity, I do. But authenticity doesn't secure your network or manage your incoming calls, so let's move to the operational side, which is where I think the Southwark Premium truly shines. We mentioned the flexibility of the Mayfair address, Duke Street or Oxford Street, as a primary value driver for you.
Absolutely. It is immediate commercial leverage. When a small firm is trying to make an impression, that letterhead alone facilitates introductions and secures meetings that an SE1 postcode simply cannot. That is a direct, high-level revenue driver, and it far outweighs daily conveniences.
I'm sorry, but I just don't buy that. Let me tell you why. In the current commercial landscape, where so much business is conducted remotely, how much initial brand leverage does a physical address truly afford compared to day-to-day operational efficiency? Utility is paramount to minimizing operating friction. The Southwark listing explicitly includes necessary services like IT and telephony in its base price. More significantly, it offers those ad hoc admin and secretarial services,
Which the Mayfield listing likely includes under its designation as managed office space.
But that's the difference, isn't it, between implication and an explicit guarantee? The Mayfair listing, while it mentions kitchens and meeting rooms, is silent on explicit inclusion of secretarial support. Now, that silence suggests either a potential hidden cost, maybe an expensive bolt-on service, or just less comprehensive support compared to a 75,000 square foot grade A operation designed for full service continuity. If those IT and admin services are hidden extras in Mayfair, the price discrepancy vanishes, and the overall cost to operate in W1 becomes demonstrably higher. The market is paying a premium in SE1 for operational inclusion and cost certainty.
But that operational support is focused on back-end efficiency. The Mayfair value is entirely focused on front-end opportunity. If your business depends on attracting a specific clientele, say you're a hedge fund or a high-end property agent, the revenue generated by successfully securing just one or two client introductions facilitated by that W1 postcode could easily justify the entire year's rent. You're prioritizing the cost of doing business, whereas I am prioritizing the opportunity for business. They are two very distinct forms of commercial value, and I argue the opportunity value is far greater in Mayfair.
But that assumes a highly traditional, localized business model. So let's pivot and consider the needs of the modern workforce, which is increasingly decentralized. This brings us to the inclusion of amenities in Southwark catering directly to employee wellness and commuting patterns. Showers and bike storage. These are no longer just nice-to-haves. They are often non-negotiable infrastructure for large contemporary companies.
They're excellent features for recruiting mass talent, I agree. But they are practical infrastructure, not prestige drivers.
But they directly impact retention and productivity, which are measurable economic factors. Southwark is known for attracting tech, media, creative industries, sectors where a healthy commute is expected.
By providing these amenities, Paris Garden is essentially future-proofing itself and targeting the most dynamic parts of the London economy. These features are listed as essential components of the Grade A offering.
And while those are important, they don't override superior access to the capital's high-value areas. Furthermore, if we're really going to discuss high-value amenities that cater to a modern work-life balance, the Mayfair office specifically allows pets allowed. Now that is a distinct, high-value, and exceptionally scarce amenity, especially in the West End. It speaks volumes about flexibility and culture, targeting a premium lifestyle that far exceeds just providing a shower for commuters.
Pets Allowed is a niche, culturally specific feature. Showers and dedicated bike storage serve a fundamental infrastructure need for a dramatically broader segment of the professional workforce. When a company calculates the utility of an office, they look at how many employees that space supports and retains. Southwark's amenities support a holistic view of the employee experience.
But the holistic experience of the client when visiting Mayfair is what drives top-line revenue for these firms.
And that leads us neatly to transport access. The Paris Garden location boasts superior transport saturation and geographic reach. It's a stone's throw from Southwark Station and a very short walk to Blackfriars, London Bridge, and Waterloo stations. That is access to the Jubilee, Northern, Bakerloo lines, and massive national rail hubs.
It is excellent coverage, undoubtedly. It services London as a whole very efficiently.
Correct. This access to multiple major hubs, north, south, east, and west, is arguably more valuable for a geographically spread workforce than the focused prestige cluster of Bond Street and Marylebone. Southwark minimizes commute times for the vast majority of employees, which, again, is a direct operational gain reflected in the higher price.
That's a compelling argument, but have you considered that the value of connectivity is context-dependent? The distinction between mass utility and targeted access is central to my position. The connectivity offered by the Mayfair office is targeted towards B2B proximity. Bond Street access is critical if your clients and partners are predominantly based in the West End, flying into City Airport, or relying on Central London's high-end hotels. The Mayfair office links the tenant to the existing density of potential high-value business right there in Marylebone and Mayfair.
But the sheer volume of access points in Southwark, 4 major stations within minutes, minimizes travel time for everyone, which maximizes the talent pool a company can draw from. The Mayfair proximity, while beneficial for those specific B2B transactions, can be a geographical choke point for employees commuting from almost anywhere outside a narrow, expensive corridor. The Southwark price reflects its capacity to serve the widest possible high-quality talent base. It's an investment in human capital.
It's an investment in human capital, but the Mayfair address is an investment in commercial capital and brand equity that is frankly non-depreciating. That W1 postcode holds an enduring gravity that dictates commercial valuations across all economic cycles, regardless of which way the market trends in terms of internal fit-out standards. That £500 price is a momentary fluke for a location with permanent commercial worth.
And yet the pricing structure we see today suggests the immediate marketplace's higher worth on the comprehensive utility, operational inclusion, and technical certainty of the Grade A product. The market is indicating that the marginal utility of a W1 postcode has been surpassed by the measurable daily utility of a Grade A product in SE1.
So, to summarize my position, while the Southwark listing offers impressive specifications and services, the inherent long-term commercial value and marketing appeal of a prime Mayfair address, opposite Selfridges, remains an unparalleled asset. The location guarantees access to a specific high-value business ecosystem. That £500 rent, while low for the area, is attached to an address whose commercial weight will always anchor its value far above temporary fluctuations in amenity offerings.
And my summary rests entirely on the evidence of the pricing itself. The market has placed a higher immediate value, a verifiable £100 premium, on the comprehensive, state-of-the-art utility provided by Paris Garden. This valuation is driven by that Grade A specification, guaranteed operational services like IT and secretarial support, and modern wellness infrastructure. It indicates that for today's dynamic businesses, operational certainty and high-quality modern infrastructure provide a superior, measurable ROI over an address that relies primarily on historical prestige.
It's clear that this comparison between the 500-pound Mayfair office and the 600-pound Southwark office really illuminates the complex interplay between the cost of branding versus the cost of operation in defining commercial worth.
Indeed. And whether a business prioritizes that client-facing prestige in the West End or high-utility operational efficiency near major transport hubs, the ultimate hierarchy of value here remains entirely dependent on the specific strategic needs of the tenant.